Hey everybody, let's hope this is working. Quick audio test. Make sure we are live. And I can't hear myself. That's not good. Hang on a second. We just want to make sure. A little mic issue currently. And it is not working. Uh-oh. That's strange. Or maybe it is. Hold on a second. Hey, can you guys hear me out there on the chat? Let me know. Trying out a new mic. Okay, good. We are good. Sorry about that. Live TV, always got a problem. So let's jump in. This is the Sunday Q&A where I answer your top questions. And let's see where we are. First of all, happy Sunday, everybody. Thank you for being here. I know the market's been very, very flat. Very kind of weird, very stagnant. Nothing is really going on, but it's good. Better to be stable than highly volatile, and we should be a gradual step upwards from here. I do believe from what I'm seeing anyway. Let's jump into the Q&A and see what we got. So first of all, as you guys know, math, money, and freedom. And disclaimer, this is not financial advice. Now, the first question from you all is awesome. This is a question I get typically quite a lot, is from Ingo K. Would you replace 4 to 5 ETH for Bitcoin or hold on to ETH if you already have almost 2 Bitcoin? So with that question, the easy way I like to address it is think about your optimal portfolio structure. So kind of these are some of the rules of the road I've shared many times before, but I'm just going to reiterate again so everybody knows. So first of all, you got to think about your portfolio balance. So here, when it's your risky speculative crypto portfolio, I believe everybody should be about 65% Bitcoin, 35% alts. And within those alts, you should be 80% top alts, which means Ethereum, Solana, or the L1 of your choice. It could be Luna, it could be maybe Avalanche or other names. I tend to personally prefer Ethereum and Solana right now. Now the other thing as well, the last piece, the 20% of that 35%, you can stake into your speculative plays, your metaverse plays, Engine Coin, for example. And I think that's a good way to think about it. Now, the second part of your question is the timing. I do believe Ethereum will run faster than Bitcoin, but wait, maybe for Ethereum to hit my price target for this bull run of 8,900. That has not changed, by the way, since January of this year. I still stick to that. I just don't know when we're going to hit it. That's the only thing I don't know. And then consider a transfer. So I hope that helps. And stay tuned for later. I'm going to talk about swapping cryptos between different assets and tax implications. That's all going to be very relevant for your decision going forward too. So next question is from Coco Pebbles. Can you describe what the tokenization of everything would look like in your world and why this would need to happen using blockchain technology? So first of all, when I think and I talk about the tokenization of everything, I'm the only one that talks about it. I think Raoul Pal talks about it a lot. You got to frame it up as to why. First of all, easy part is why blockchain. It's more secure, better, cheaper, faster, etc. It is the future. Everything will be put on the blockchain. And when I talk about tokenization of everything, I'm putting together this little exhibit to try and showcase examples of what types of things could be tokenized. So first is art. I chose art first because obviously we're living in this NFT craze and it's very easy to wrap your head around. So art can be digital, or it could be a Mona Lisa or a Picasso. It can be transferable. And the unit, purpose, and supply, the unit is fractional, the purpose is payment, tokens, and supply typically should be fixed. There's no point in buying something that's not fixed. That's why I do not like inflationary assets, including cryptos or fiat cash. Second one, hard assets, real estate. No, real estate is not digital, unless you're talking virtual real estate, but that would be under art in the category above. Is it transferable? Yes. And again, fractional payment tokens fixed, same as art. Third piece could be shares or equities, and we're already seeing the tokenization of equities in different parts of the world happening right now, like Switzerland and other places. Digital? No, because technically equities are not digital. They are tied to being a piece of ownership of a company, so I don't consider that digital. Transferable? Yes. And again, unit, purpose, supply can be fixed or unfixed. So for example, if an equity increases the number of shares that they have, and I'll talk about that as well a little bit later, that would be unfixed in that case. Bitcoin is fixed. That's why we love it. Fourth part is identification. We could have our medical records online. We could have our vote capability online. We could have our resume, references, all online. Again, digital, yes, could be. And transferable, no. Very important. This stuff is not transferable. And again, the unit is a single unit. You should only have one ID, one passport, or multiple passports in that case, but the same passport can only be copied one time. Or not copied at all, I mean. Then you've got your asset tokens, and of course, not fixed. And finally, membership. That could be digital. And again, that could be anything. It could be a membership to YouTube or whatever else. So that's what I mean by the tokenization of everything. And that's where we're going. So buckle in, it's going to be a fun future. So next question is from Eve's PDF. And this is a tough one. I got this a few days ago and it made me think a lot. So is capital preservation really important when you have not reached your financial goals? And I know a lot of people struggle with this. Like, if I have, say, $10,000 or $100,000, you just put it all on the table, all on red 36 or black 36, whatever that number is. So I think about it in a few ways, and there is a little bit of a dilemma here, so bear with me. So first of all, I always say, step one, preserve capital. Step two, grow it. You need to always manage risk first. Very, very important. Now, the rule of thumb, typically, is the less capital that you have, the lower the risk you can assume. Now that may sound risky. Some people say, well, I don't have a lot of money. Why don't I just make a big bet and try buy 1 million shares of some meme coin and hopefully they all go to $1 one day and then I'll have $1 million. I got nothing to lose because I have no money anyway. That is not a good strategy. Again, it takes money to make money, but you need to start building up your building blocks slowly. So the other thing is, the rule of thumb is the less capital you have, the lower the risk you can assume. Very important. Now, the paradox here is the more capital you have, the more you focus on preservation because you don't actually need the money by which to live. But the other part of that paradox is the more capital you have, technically, the more risk you can take. So, for example, if I was dependent on money to be able to pay my rent and my food and everything else, I would have to be very, very cautious. But because I don't, I can take much larger levels of risk with investing and trading. Again, not financial advice. So the targets as well, the final part of this to think about is, I always come out in thirds. 1/3 of your portfolio, your investable assets, your net worth should be in safe investments like real estate. Not necessarily real estate, but like real estate. Things that if they fall on your foot, it hurts. 1/3 should be in mid-risk stuff, very solid place for the future. I always say like Google is a good example of that. It just keeps on going up. It's like Bitcoin. It's programmed to just keep on going up. And then your last third of your portfolio should be in speculative assets like Bitcoin and crypto and other select names. So again, in full disclosure, my background is in risk management. Therefore, I need to be able to fathom value before investing. So I am very conservative and I've focused very much on preserving capital and avoiding losing money. That pains me desperately. So, hope this helps, Eve. So next question is from Deutsch Langherr. So this is interesting. It was announced that Teladoc COO is leaving Teladoc for NextGen Healthcare. Does this change your Teladoc thesis or your entire on-equity portfolio at all? So the best way to look at, obviously, COOs, not CEOs. COOs are operational people. They're not driving strategy or leadership. They run the ops. So they're not critical to the business. Also, my position in Teladoc based on my overall portfolio is like less than 0.1%, probably less than a quarter of, it'd be like 0.0025%. It is tiny, tiny position. I got in as a speculative thing. And one of the reasons I got in as well is a lot of my Teladoc conviction came from Cathie Wood. And she continues to buy at every dip. So the couple of things to note here is Cathie Wood's average price is $170. And she's been buying every dip all the way down. She was actually buying Teladoc way over $230, $240 at one stage during the year. So that's important to note. Her conviction is very high. Now, Looking at some of the numbers for TDOC, their revenue expectation this year is in line with expectations, but they have been hammered in the market really, really badly. But their growth rate is extremely healthy for the coming years. I think they plan to exceed over 4 billion in revenue by the year 2024, which is not very far away. Remember, we're a few weeks away from 2022. And so their revenue will be doubling in 2 years, 3 years, translating to a compound average growth rate of about 30%. And during these endemic times, if you have a long-term conviction, like 12 months, 2 years, 3 years, this will definitely rebound. At least within a year, I believe we'll see north of 160, 170 again. So that's my take. Again, I've got a small position. I'm waiting for the market to really fully capitulate before I get more of this and reduce my cost basis. So that's my plan. Same with some of the other biotech names that have been absolutely hammered during this market. And things like TDOC actually should be supported by the recent OMI scare that we've had out there in the marketplace. So thank you for the question. Next question is from Christopher G. I need to borrow from Celsius. The first margin call is at 33,000 and liquidation level is at 27,000. Do you see Bitcoin falling to 33,000 from Christopher G? So this one, we're going to refer to some charts here, and this will be applicable for where we are today as well, because I know a lot of people are concerned about Bitcoin, the crash, is it game over, is it the end of the bull market? So there's a lot to unpack here. Let me pop up this chart and walk you guys through what I see again. So first of all, during bull markets, during bull markets for Bitcoin, it spends most of its time above the 200-day moving average. During the summer, though, we did fall below this to the tune of about 25%. Now, to get to 33K, we need to fall 34% from where we are now, which is a lot more than the dip that we had below the 200-day moving average during the summer. So the long-term floor, especially considering things like adoption and on-chain metrics, 46K looks like the new floor. In fact, somebody, I don't remember who it was today or yesterday, said the bottom is in. We thought, max pain for the options pricing was 55K a couple of weeks ago, but this is different. This has been clearing out an extreme amount of leverage, and that's why we are where we are in the marketplace. Now, Alex Mashinsky came out and said we'll go to 140 to 160 by Q1, Q2 2022. And we'd retrace to a maximum of 80K. So a lot of bullish signals out there. But again, remember, there was an extreme amount of leverage that was wiped out, and that has now set the course. Sometimes when there is so much leverage out there in the marketplace, it puts a lid on the ability to grow up because of that max pain level. So many people are playing the short game, so many people are playing the long game, and this brings the whales in to manipulate. So this is not a market movement based by accident or retail demands or investor demands. This is purely orchestrated by extreme amounts of leverage and a little bit of manipulation sprinkled on top. So be careful. Now let's look at one other chart as well that's important. This is what I call the 50-week moving average. And here you can see the red line is the 50-week moving average and where we have bounced off of it. Okay, we did this at the end of June. We did it in July or August. And we did it back in October. And we did it again today. In fact, the wick was extremely vicious because of the cascading losses, but you got to look at the close, not the wick. And per the close, we are still above that 50-week moving average. So this gives me a lot of comfort. And we'll talk more about the 50-week in a little minute as well. So thank you for that question. Now, net in conclusion to your question, do you see us hitting 33K? No, there's probably a 2% chance that would happen, 98% chance it wouldn't. So, and then 27K, highly unlikely. Again, I do believe that 42K, 44K is the worst case floor, but there could always be wicks, but I don't see us going to 27K, not by a long stretch. So next question is from Porsche 993, nice car. A short while back, Bitcoin increased $2,000 while MicroStrategy decreased $100 per share. Very painful for my position. Help me understand this disconnect. So, interesting one. MicroStrategy is, I believe, the best Bitcoin proxy out there, but you got to be able to time it right. And I'm going to walk you through a couple of things here, which I've been talking about since my very second and third YouTube videos. Number one, Friday, the intrinsic value of Bitcoin on the MicroStrategy balance sheet was 102% of the market cap of the company. This means that the business itself, which before they started buying Bitcoin was worth 1.2 billion, was actually worth a negative 2.1% of 7 billion. So this is funny mathematics. And to me, this was an arbitrage trading opportunity. And I actually got added to my MicroStrategy position because of the price. But I did not expect Bitcoin to fall $12,000 over the next 12 hours. So MicroStrategy could be a lot cheaper on Monday. So we'll see what happens. But there's other things that actually happen as well behind the scenes. If you look at what we call the MicroStrategy shopping model, and this is a quick summary. Thank you to Sanjay as well. He texted me this morning. I knew these numbers, but it was kind of a nice little summary of how it works and very appropriate for today. So MicroStrategy bought 414 million of Bitcoin, 7,000 Bitcoin a few weeks ago. I think it was last week. Yeah. Their Bitcoin holdings now are 121,000, average price 29,000. Now, to fund the purchase of those 7,000 Bitcoin, they sold 571,000 shares, but they sold them at 732 bucks to buy Bitcoin at 59,000. Yes, they could have waited a little while and bought a little bit cheaper, but if you look at the delta between 59,000 and where Bitcoin is today, 49,000, it's 10,000. If you look at the delta of the stock they sold at 732 average price versus the stock today, it's under 630. Big difference. This is part of what I call the financial jiu-jitsu. They can issue debt, they can issue shares, and they can buy Bitcoin. So one of the reasons we like them. Now there is of course a little bit of dilution, but net, it is a good position to be in. Let's look at the chart as well. We spoke about the 50-week moving average for Bitcoin. This is the 50-week moving average for MicroStrategy. And you can see, look at those bounces. You can't make this up. 1, 2, 3, 4, 5. We actually wicked below the 50-week moving average. And that's why I layered into MicroStrategy again on Friday, because it's going to bounce. Now, of course, there's always a chance. In this course, none of this is financial advice. There's a chance that Bitcoin could go to zero. And then this position will be very much underwater. But looking at how it moves, this is technically a buying opportunity. So I hope that helps with the question. But there's always that arbitrage opportunity where MicroStrategy is oversold in relation to Bitcoin, sometimes overbought in relation to Bitcoin. And that's when you either go long or go short, depending on the situation. And we monitor that very carefully. So thank you for the question. Next question is from Chris Guthrie. Would you exchange a Bitcoin for SOL and ETH? Get this all the time. So I decided to dig a little bit deeper, make up a scenario, and I want all of you, if you are in this situation and you are considering moving from one asset to another, swapping things over, please take into account the tax consequences. If you live in a tax-free zone where there's no tax on crypto, don't worry about it. But here, this scenario here I put together assumes you bought Bitcoin 11 months ago at $20,000. So this assumes you'll be paying short-term capital gains. Now, if you're in Los Angeles, for example, and you make $250,000 and you're single, you'll have to pay $14,430 on that capital gain. So your capital gain is $30,000. You pay nearly half back in taxes in California. Again, your cost base is $20K. You sell at 50. That's your short-term capital gains. So that's an important part of this. The next step, I put together a little spreadsheet, and here it maps all the different scenarios out. Again, please build your own little spreadsheet and run these numbers. But your initial investment is at the top line, your 20,000, your gain is 30, your value is 50,000 in Bitcoin. Now you decide to sell your Bitcoin, you'll pay your 15,000 in taxes, you're left with $35,000. They're the two middle rows in the sheet here. So you got $35,000 to spend on either Solana or Ethereum. I had them as discrete and based on the prices today, right now. So Ethereum is 4,000, so you get 8.75 ETH for $35,000, or you get 187 SOL at, well, those numbers are uncanny. The price of SOL is $187 and the value you get is 187 tokens. That is weird. And again, this is a model, so it calculates itself. I just thought the 187s were kind of funny. Okay, so here's your HODL summary. if you held your Bitcoin, imagine you had one Bitcoin, it cost you $20,000, and we go to our bull run target. Again, these targets have not changed since earlier this year. My bull run target for Bitcoin is 98,000. That could be March, April 2022. Who knows how long? It could even be longer. Some people now, even Benjamin Cohen said we could go as far as late this year, even early 2023. So that would be your total gain if you did not sell would be $78,000. Now, your ETH, your 8.75 ETH, if you go to my bull run target of $8,900, your value will be $77,875 and your gains will be $42,875. And your SOL, per my target, my middle of the road, my expected case scenario for Solana is 480 bucks. This bull run, 187 tokens, will take it to 90,000. Your net gain will be 54,840. This is what you need to consider. When you start swapping and you have tax implications, you need to do this expected value simulation to understand what you're better off doing. And in this case, you're probably better off holding Bitcoin, waiting for long-term capital gains before you swap out. So everybody, please build your own little sheet, run your own numbers, but it's very, very important to look at those numbers as well. So you can see, surprising result, hodl. That's why it's good to hodl. Okay, next question is from Sunita Yalamarti. Does USDC have the same risk as Tether? Do you think it's better to get out of USDC? And is there any other stable coin that is really stable I can move into? Great question, important for us all to know. Just a little sidestep here, there's a lot of risk now in exchanges, lots of news of hacks, DAOs getting hacked, little tier 3, tier 4 exchanges getting hacked, DeFi platforms getting hacked. Everybody be careful. Only transfer your money to safe places and make sure when you transfer things, you transfer like for like. Don't try sending a Binance version or something to some other exchange. It's going to be rejected and you could lose your crypto. So be careful of that. So back to the question, best stablecoin? Tether has too much regulatory FUD and the backing is definitely not 100% backed by cash or cash equivalents. Therefore, I would be a little bit concerned with Tether. Now, Tether's okay if you have a very quick real-time transaction. If you sell something, move it to Tether and then transfer your Tether immediately, you're okay. But do not hold Tether on your account for a long period of time in case it does blow up. It's very unlikely, but there is a small chance. Now, USDC, on the other hand, is the second largest stablecoin, and it's backed by Coinbase, which is a publicly traded organization, and it's all cash and cash equivalents backing USDC, and it's been audited. Therefore, it's the safest place, but not as widely accepted as USDT, and a lot of the other stablecoins out there, they have yet to be proven, but I think USDC is the safest place to park, if you can. Thanks for the question. Next question. What books, courses would you recommend for beginners to understand investing and financials? From Jim Robalino. Thank you for that question. So I posted this a long time ago on in the community, but my favorite books are these three. They are very, very heavy reading. One is Investments by Bodie Kane and Marcus. The other one is John C. Hull, Options Futures. And then from Cliff Ragsdale is Spreadsheet Modeling and Decision Analysis. Obviously, I do a lot of modeling. These are the three best books. But again, they are like all over 1,000 pages long, extremely technical. It might be too heavy. Now, I do believe as well, if you are looking for anything, you can find it on the internet, you can find it on Twitter, you can find it on YouTube, you can find it in white papers, etc. So research online first, exactly what you're looking for. You can probably find at least a better summary than going through some of these books. But I hope that helps. And in terms of courses, I don't sell courses, but again, I believe you can find anything online, probably as good or better than a typical course you'd buy. So that's just my 2 cents. So next question, this is regarding Phaeton from the ZEC. I saw a Phaeton token, which you mentioned in a video a while ago as possible new interesting token, launched an IEO and LA token and P2PB2B starting at $1. Is it an investment worthy project? So I first came across Phaeton because I was reading Medium, and there was a couple of Medium articles saying this is the Solana killer. This is the new best SCP, smart contract platform. And then I tried to dig in because that got my attention. But when I started digging in, like this is some of the marketing stuff that they say. It's like 1 million TPS, real estate NFTs, blockchain identity, green infrastructure. You know, it's proof of stake, so of course it's going to be green. But they talk about reusable and recyclable and all this type of stuff. So for me, there's no info, there's no data. There's a couple of Medium articles that are pumping it. There's nothing on CoinMarketCap, nothing on Masari. Their marketing materials are desperate. White paper is sketchy, and it's just far too risky for me. So investing at this stage, no way, I wouldn't touch it. So that's the Phaeton update. And in the happiest part of the video is this. Your contributions are donations. Super chats and stickers and all that stuff go towards helping animals. And here, this is an organization in Kenya, and they patrol for any sign of poaching activity, and they rescue animals that are in danger, including these 4, which we sponsored. These 4 rhinos are Apollo, Solio, not related to Solana, of course, Maxwell, and Magnum. So big thank you everybody for making that possible. Really appreciate it. Hope you guys like the content. Happy Sunday, and I'll see you all tomorrow. Bye, everybody.